Hey guys, good afternoon, everybody. Today is Monday, October 24th. Our mentoring session is scheduled for 2 o'clock. It's 2:03 p.m. right now, so just running a few minutes late. YouTube's been kind of lagging with this live stream, so I'm just getting this set up real quick, and then we will get started shortly. So just give me a few moments to finish setting this up right here, and then we should be good to go. Good. All right, solid, looks good. Let me get this link sent out to you guys here in the premium. And we should be good to go. All right, cool. So I get a few moments for people to make their way in. And I'll put over here what we're going to be covering for today. So main topics for today's mentoring session. So for one, we're going to cover the SR rejection scalp strategy. 2, high-low quick scalp. 3, cover variation V1 plus V1 continuation. And I think someone wanted me to cover the daily US 30 plus daily counter trend. So a couple of things here that we will be covering. Yeah, if there's anything else that you guys want to cover, feel free to put your questions in the chat. I'm here to help you guys out. So whatever you guys need help with, feel free to drop your questions in the chat. Otherwise, for today, I think the main things we'll be covering will be the SR rejection scalp strategy, the high-low quick scalp strategy, and the variation V1 plus V1 continuation. These are basically the main strategies that we apply during the live sessions. I mean, it's basically a trifecta here. This is all you really need because these strategies work in all market conditions. Well, not all together, but for the most part, when one's working, the other one is typically working somewhat. And if the others aren't working, then one of them will be the main ones that we look at. So we'll start off with this, the SR rejection scalp strategy. As people make their way in, we will continue on with our questions for today. So if you guys have any questions, feel free to put your questions in the chat. If you guys have any questions while I'm going over these examples, just drop your questions in the chat, and then we can cover whatever you guys need to clear up any confusion and to just focus on what we've been applying during these live sessions. So with that said, I'll go over a few examples here. I don't see any SR entries here. I'm gonna just scroll back to see if I see one. I'll scroll back and then we'll take a look at it. But I think as of here, I don't really see any. Yeah, I don't see any SR rejection entries here. There weren't too many. I think there might be one right here. Yeah, this one looks like a good one. So what I'm going to do is I'm just going to turn off a couple of these things. Basically, turn off the stuff that we don't really need, right? So we don't really need the pivots for this strategy. I'll go over the requirements here as we continue along. But let me just rewind to, or I'll draw the zone here first so that you guys can see it. We have the zone right here. And I will just turn this off to clean it up a bit and rewind it to this specific candle. All right, so main topics right here. I'm just going to leave this down here, and then I will put the requirements for the SR rejection. So the main time that we apply this strategy is when the market is ranging or consolidating, right? This is like the best strategy for that type of market condition. However, this strategy works with pretty much all conditions. It just works the best during consolidating markets because this will allow you to take trades when price is kind of bouncing back and forth within an area. As you guys can see right here, price was actually ranging between this high and this low over here. When price finally broke above it, it started to move directional. So as you guys can see here, there's probably going to be some entries here as price moves along, but when price did break above it here, there was a possible entry for a buy. So let's go over the requirements over here. For buys, you want to identify a bottom wick rejection off the K2SR V2 zone with a moderate green candle. So since the trend meter down here is green, this is going to be the main catalyst when identifying, which direction to take these trades in. If the trend meter is red, you're looking for sells. If the trend meter is green, you're looking for buys. So that's the reason why I've immediately looked for a buy here, because I saw that the trend meter down here is green. So for the first requirement, you want to identify a wick rejection off the K2SR V2 zone with a moderate green candle. So looking at this candle right here, you can see that there is a wick rejection off the structure. This structure was drawn off the K2SR V2 indicator, which is right here. So typically you'd have your indicator on, but just to clean it up and make it easy for you guys to see, I just drew my own zone over it. So instead of just having these zones on here, I just draw my zone and then I turn it off to clean up the chart. But if you guys want to leave it on, I typically leave it on. But it's really up to you guys. It's up to preference. I like a clean chart, so I typically just draw my own zones. But if you don't care about that, you can just leave the indicator on and you can see that there's still a zone right there, right? So first requirement, identify a bottom wick rejection off the SR zone with a moderate green candle. In order to determine whether this candle is moderate or not, you just want to measure the wick in comparison to the body. So the wick right here is about 5 points, which is 50 pips, while the body down here is 180 points, right? So as long as the body is bigger than the wick, it's considered a moderate candle. So with that said, we have requirement number 1 met here. Second, you want to confirm you're trading in the direction of trend using the K2 trend meter. Down here, you can see on the bottom, it's green. So this is going to indicate that you're looking for buys and you're trading in the direction of a bullish trend, which is in the direction of your trade. Secondary requirement, you can use the pivots as well if you want to turn the pivots. Basically, if price is above the pivots and the green pivot is over the red, this is going to indicate that price is bullish as well. It's not required, but this will help you have a better understanding as to what direction price is going, because you have the trend meter, which is bullish. You also have the pivots that are bullish. Odds are it's probably going to be bullish. So with that said, you have requirement number 2 met. For requirement number 3, you want to confirm that you're trading in the direction of momentum. In order to do that, you just want to look back at the most recent momentum signal. You can see right here, the most recent momentum signal is a green bullish signal, right? So in order to determine that you're trading the direction of momentum, just look back, and if you can see right here that it's a bullish buy signal, then you're trading the direction of momentum. If it's red, then momentum is going the other way. So with that said, we have requirements 1 through 3 met. Once you have all those met, you can enter on the open of the following candles. You'll enter a long position right here. Your TP stop loss is set to 100 pips TP, 300 pips stop loss, just to have some cushion there in case price does retrace, because typically price may retrace, halfway or to the entire candle before pushing up. So once you have all the requirements met right there, you take the trade, you let the trade run, kind of bounces around a bit, and then it pushes up higher to hit its full TP right there. So yeah, if your spread was kind of tight, you probably wouldn't hit your TP right away. It probably would retrace a little bit. As soon as it retraces, it comes right back up and then blasts right through your TP right there. So solid entry. And there goes an example of the SR rejection scalp strategy. If there's any other questions regarding this strategy, feel free to put your questions in the chat. But as you guys can see, it's pretty self-explanatory, simple strategy, not too difficult to apply. And this one can pretty much be applied throughout all market conditions. It'll work best during consolidation and ranging markets, but you can still apply this even when price is moving directional. Let me see if I can find another example here. Just to run through this. Let's see. No entry here. Trend meter is blue. No entry here. There weren't really that many SR entries today. I mean, there was a couple that we saw during the live session today, but they weren't I mean, they weren't really clean entries. Let me check this right here. All right, so there's another one right here. I believe, let me go and just replay it to this candle. There's actually one right here too. There's like two of them actually. So there's one right here, and this is going to be an example for a sell. So again, we're looking at the trend meter down below to determine if we're trading the direction of the trend. This is going to be the main catalyst. If it's red, you're looking for sells. If it's green, you're looking for buys. So with that said, we have one right here. I'm just going to mark up the zone, clean it up a little bit. We have an example right there. Turn this off. So looking at the sell requirements over here, you want to identify a top wick rejection off the K2SR zone with a moderate red candle. So with that said, we have a wick rejection right here off the structure. You want to confirm you're trading in the direction of the trend. The trend meter down here is red, so that satisfies the requirements. Looking at the pivots, same here, right? It's not as strong, but you can see prices swinging below the pivots and starting to angle to the downside. So with that said, we do have a bearish bias here. So first requirement met, second requirement met, third requirement, you want to confirm you're trading in the direction of momentum. So with that said, right here, we have a sell signal. That's going to fit the requirements there. You'll enter this for a sell position right there. TP is 100, stop loss is 300. Let the trade run. Full TP on the next candle with little to no drawdown, like literally straight to your TP. So there's one example right there. And then I think there might be another one right here. Let me see if I can find one. So that was one right there. And then it looks like there was possibly another one right here as well. So there's two back-to-back wins right there. So first entry right there, wick rejection off the structure, sell momentum, trend meter is red, everything fits the requirements. That's your first entry right there, full TP. And then the second one right here, same thing, wick rejection off the structure, moderate red candle, trend meter is red, prices below the pivots, red pivot over green, all requirements met, two back-to-back wins right there for the SR rejection. So as you guys can see, super simple strategy. It works really well during these ranging markets because you can see price was actually ranging around this area at a high right there. There was a low right here. So when this entry came up right here, price was actually breaking outside of the range. So you basically caught the swing to the downside right here. And same with this one, continuation. Price came back for the retest, came right back down, and then it hit its full TP. So there are a couple examples for the K2SR rejection scalp strategy that came up today during New York session. I don't know if there's any more around here. Let me see if there's anything else for me to look at. I think that's about it. There's no entry right here. Trend meter is blue. Yeah, no entries here at all. So I think that's it with the SR rejection strategy. If you guys have any questions regarding the SR rejection strategy, let me know, and then I can go over your question in detail. So that's going to be it for the SR rejection scalp strategy. As I mentioned, guys, through all these mentoring sessions, we're going to focus on like what we apply during the live so that you guys can be more prepared for the market, tomorrow and the rest of the week. So just give me a moment real quick. I'm going to turn on the AC. It's going to be hot. All right. Cool. So I think that's it for right now with regards to the SR rejection scalp strategy. I don't see any questions here. So if you guys have any questions regarding that, feel free to put your questions in the chat. If you have any other questions, feel free to put your questions in the chat as well, and I can clarify whatever you guys need help with. Moving on to the second topic, we're going to cover the high-low scalp strategy. For this strategy here, I think I've kind of figured out another requirement, and I'll show you. It makes things a whole lot easier. This could probably work, especially or this could probably help instead of using the pending signal, because the problem with the pending signal that we use when not to take a trade is that it comes up too often, right? It comes up too often where you can't, you end up not taking any trade because there's always going to be like a pending signal there. So what I'm going to do here is I'm going to just make a couple. I'm going to add one more requirement to it. So fourth, confirm. Momentum candle, and I'll explain this I'll explain this shortly. It's really not that difficult of a requirement to add on to it. It just helps with direction. So we might be able to, and I'll probably use like 200 pips here for, this is just what I've been using lately. So I'll just keep that at that. You know, if the spread gets super wide, then we'll have to like make it a bit wider. But I think for now, this is cool. So I just added one more requirement to this strategy here. And let's go over this here. So the thing with this strategy here is that you don't typically use the trend meter, but you typically want to trade in the direction of you know, bias. So like we can't look at the bias here because this is like so late into the market. So we'll just assume, like I'll show you examples here, but we're just going to assume that you know, certain entries here fit the criteria. So we're going to assume the direction. And I'm going to go back right here and show you a couple examples. So we got one example, which is, all right, so like right here. So here goes the first example that I'm going to show you. Yeah, Natasha said, yeah, it seems it always has a pending signal. Exactly. So I know that requirement was helpful before, but it happens all the time and the trade still hits. So we're going to just scratch that. We're going to use this extra requirement. Confirm entry isn't past the momentum candle, to help with, you know, understanding our entries here. So we got a couple entries here. Actually, let me go back to this one first, because this one's actually the first one that came up. So you can see with this one right here, Natasha, that, like, let me just go back real quick. And I'll show you how like it kind of gets in the way when that happens. So right here, we're looking for a buy. The reason we're looking for a buy is because we have a bullish momentum here, right? So if we have a bullish momentum, we're only looking for buys. If we have a sell momentum, we're only looking for sells. So with this entry right here, I'm going to go to the next candle and you guys will see that there's a pending sell that comes up as soon as the candle appears. So let me just move next, and you got to focus on this next candle right here. And you can see that there's a pending sell signal there, right? Typically, when you see something like that, we would just skip the trade because it kind of indicates that, you know, price is trying to push lower, but we've noticed that that's not always the case. You know, it's just a pending momentum signal, and then it ends up continuing in the direction that it's supposed to go. So going to the requirements over here, let's just go over all the requirements. First, identify bullish direction of momentum using the momentum indicator. We have a buy signal right here, so momentum is bullish. Second, you want to identify the low using the high-low indicator. So with that said, we have a low right here, high right there. We don't care about the high because we're looking for buys here. We're looking for the lows. So with that said, we have the low right here, right? For the third requirement, you want the bottom wick rejection off the following candle. So identify the bottom wick rejection off the following candle. So for example, we have a low here. This next candle has the wick on bottom, right? When you identify the wick on bottom, it doesn't have to necessarily bounce off anything, but you just want to see, that there's a wick there. So once you have that requirement met, you just want to confirm that entry isn't past momentum candle. So you want to make sure that this candle doesn't go below the momentum candle, which is right here, right? You can see this entry is above it, so it's perfectly fine. It meets all the requirements. As soon as you see the wick, you can enter this for a buy right there. Your TP stop loss would be 100, 200. And once you let this trade run, you can see it blast right through TP with like absolutely no drawdown. So there's an example of one right there. I think there's another one that comes up over here as well. So again, you're looking for another low. So again, right here, we have another low, right? This is going to be the same setup. So identify bullish direction. We have a buy signal right here, so that fits your criteria. You want to identify a low using the high-low indicator. You identify the low right there. You want to identify the bottom wick rejection off the following candle. So this is a low here. You're looking for the wick on the next candle. Let this trade run. And you can see right there that your entry would have been somewhere around this area. So when price pushed down, as soon as you saw the wick, you would have taken the buy. And your entry technically would have been somewhere, you know, somewhere down here. I don't know exactly where, but it'd be somewhere around this area. If you're following it, you'd probably enter like right here, perfect entry, right? Go straight to your TP on that same candle. You know, if you entered a little later, you'd probably be up here, but you still would have hit your TP eventually at some point. I mean, either way, price kept pushing up, so you would have hit your TP at some point, whether you entered late or whether you entered on time down here. But again, this is Another example of the same type of setup. And for the new requirement there, confirm entry is not past momentum candle. You just want to make sure that your entry doesn't pass this line down here where the momentum's at. Because typically if price drops below its point, this line, odds are it's going to keep dropping further, right? Because you're going to get a sell signal at that point, and price is probably going to keep dropping further and further below. So with that said, that is an example of some buys right there, applying the high-low quick scalp strategy. So let me go back a little further and see if I can find any other entries here. Maybe something here for a sell, if we can pull one up. So let's see, question from Natasha. Natasha said, so at the beginning, we were told not to take the entry if the wick did not show right away, but I have found it still hits even when the wick doesn't form right away. It doesn't need to form right away, Natasha. So what you're doing is you're just waiting for any wick. So it doesn't have to happen right away. It can happen like, 30 seconds into the candle. It just matters. Like the only thing that you care about is the wick. So as soon as you see the wick, you can take the buy. But it's a 1 minute candle. So you have a whole minute for it to happen. Like price can push up and then come back down, create the wick, and then push up at like the last 10 seconds of the candle. And you're still fine to take the entry at that point. So yeah, there's no time limit for it. I mean, if the wick doesn't show up before the candle closes, then obviously no entry there. And I'll show you an example right here. So here, I know there was another entry that came up here, but it didn't fit the criteria. So there was a low right here. And then this right here, see how no wick came up? At that point, then you for sure don't have an entry because you don't have the requirement met for identifying the high low with the wick rejection off the next candle. So this isn't a time where like, you never have the entry. For these over here, I'm not sure how the candle moved real time, but if price did push up slightly, then came back down at the last, 5-10 seconds, then it would still be valid for an entry. I feel like this one over here might have been one of those types of entries because you can see that it actually closes. This one actually closes like way down below. So this one might have been one of those types of entries that you were talking about where price was like up here and then all of a sudden price dropped and came right back up at the last couple of seconds. Yeah, no, definitely. So as long as you see the wick, that's completely fine. If you don't see a wick, then you would just skip it. So yep, spot on, Natasha. Let me see if I can find an example over here for a sell. Or I mean, I can keep looking at some more buys here. If there's any questions you guys have, feel free to put your questions in the chat. This session's for you guys. So whatever you guys are confused with, or whatever you guys need more focus on, I'm here to clear that up and pretty much show you guys exactly what you guys need to look for. Because these strategies are super simple. The only problem here is that like I feel like a lot of people don't practice them enough. So they don't know what to look for, or they just don't understand the requirements completely. So again, over here, there's another example for a buy. Reason why we're looking for a buy is because the momentum signal here is green. So with that said, I'm going to go and just mark this up so you guys can see where momentum's sitting. Again, identify bullish direction of momentum using momentum indicator. We have a buy signal right here, so that fits requirement number 1. Requirement number 2 is you want to identify a high-low using the high-low indicator, or identify the low using the high-low indicator. So price pushed up, came back down. The low is right here. So that fits the second requirement. Third requirement, you want to identify bottom wick rejection off the following candle. So bullish signal here. So we know we're trading for buys. Identify the low right here. Third requirement, identify a bottom wick rejection off the following candle. So this candle right here, you can see the wick on the bottom. That's where your entry would be made. Right there. So your entry would have been made if you got in at perfect timing, it'd be right there. If you got in a little late, you probably would have gotten right there, right? It doesn't matter. As long as requirements are met, you should be good. So for the last requirement, you just want to confirm that the entry isn't past momentum. So momentum's way down here, and the entry is way over here, right? So this is fine. Everything meets, criteria is met. Once you have all the requirements like that met, you can enter as soon as you see the wick. So if you enter right away, you'd be down here. If you entered late, you'd probably be somewhere around the middle, which doesn't matter. So once you let that trade run, you can see price kind of bounces around a bit and hit your TP right there. So there's another example for a buy. I think there was another one that came up here, possibly. There's no wick right there, so no entry off that one. See if I can find another one here. No, there's nothing here. Let me see if there's any other. All right, so I don't see anything here. I know that the bias was bullish, like pretty much most of the day today. So that's why a lot of these entries here are buys. I'll see if I can find another entry here. So there's a couple other entries here for buys as well. So I'll just replay it over here. And I'll just go over these examples super quickly because you guys already know what the requirements are. I kind of broke it down for you guys. I'll keep going back until we see a sell, because I'm sure there's like at least one sell that had come up somewhere around here. So again, right here, buy signal. There's a low right here. So buy signal, low, wick off the second candle right here. So this would have been the entry, full TP, of course. Again, right here, low. There goes a wick off the next candle right there. If the trade was to run on the next candle right here, another full TP right there. So two back-to-back wins right there, that one and that one right there. Let me see, question from Rashida. Rashida is asking, if it's close to sessions, are we still using that as a red flag for this strategy? Yes. So the red flags are the same for all strategies, Rashida, especially on the 1 minute. So any of the scalp strategies on the 1 minute, the red flags apply to pretty much all strategies. So I'm not sure if there was sessions around here, but if there was, we would have skipped it. Yeah, so no sessions around here right now, but if there was a sessions around that area, we would skip it, especially if price touches it. So if price touches the sessions, or if your TP is past the sessions, then that's where you would skip it, because you don't want to get caught in like market manipulation, especially if your stop loss is really tight at 200 pips. It's a pretty tight stop loss, because if it goes back into drawdown even a little bit, incorporating the spread into that, you're going to get price stopped out, because so here's your stop loss, right? 200 bips. Say you enter the trade, you got to cover the spread. Spread's going to be about, I don't know, 50 pips or so, right? So you enter this trade and you're already in drawdown like that much. Price comes down a little lower, you're still going to be pretty low. It's going to be kind of difficult for you to make it out in profit if price doesn't, pull back. Because sometimes it goes straight into profit, but the spread kind of gets you trapped in the position because you haven't covered the spread yet. And that's why you want to avoid trading near these sessions, because if you get caught in these fake outs here, the candles are going to spike a bit, enough to stop you out. So definitely keep track of the red flags for all strategies on the 1 minute. All right, so let me see if I can find another example over here. I showed you guys a bunch of buys. I'm going to see if I can find a sell here. I don't really see. So there's like one right here. Let me just go back a little bit. This is like around 10 o'clock. This was kind of like a bad area to trade because I think Yellen was speaking, but it still meets the criteria here for a sell, I believe. Yeah, so criteria is met over here. So let me go and just show you guys. This is a bit of a tight entry, but I just want to show you and be transparent with these entries here. Even if it's like a risky entry like this, this is why it's key that you guys get prime entry point when taking this specific strategy. So this is kind of an area where I probably wouldn't trade. The reason for this is because you see how the high lows are after each candle. You don't want trades that are like this, because this strategy is not meant for consolidating and ranging markets. You can see that price is actually ranging right here. And the easy giveaway for these types of market conditions is when you have like these high lows that come up right after each other. Typically, when you have proper high lows, there's like a gap in between them, right? So you have a high right here, and you have about like 1, 2, 3, 4, 5, 6, 7, about 5 to 7 candles before the low gets established. If you have a low here, and then a high and a low right after, there's no real swings right here, right? It's just price going up and down. So like, for example, up here, I probably would skip some trades because these high lows just come too close. You kind of want them to be spread out. It's like these momentum signals. Whenever you have the momentum signals like this, you can see that price is getting caught in a range, right? If that's what happens, then you need to shift from looking at these high-low quick scalps to the SR rejections, right? Because each strategy is meant for a different type of market condition. If you guys are not familiar with that, let me just put them down over here. So strategy to apply according to market conditions. So for one, variation V1 plus V1 continuation apply during heavy trending markets, right? For 2, the SR rejection scalp apply during ranging, consolidating markets or trending. So the SR rejection scalp can pretty much be used in all markets. The entries just don't come up as often, especially if the zones are so far. So that's why you can't really have as many entries. So whenever price is ranging, you want to focus on the SR rejection scalp. And then for the high-low quick scalp, apply during moderate to heavy trending markets. So as you guys can see right here, these are the 3 main strategies we apply during the live sessions. And if you guys have been on the lives, you guys know exactly, when to look for the specific trades, because I typically mark this up and I give you guys constant updates, especially on the clean chart, whether price is ranging, moving directional, consolidating, etc. So, as long as you follow the live properly and you listen to what I'm analyzing, you guys will be able to know exactly what strategies to be applying, or which strategies not to be applying. But I mean, for the most part, these all work pretty solid, throughout all types of conditions. It's just when you see something like this, you might want to skip it. So for this one right here, I probably wouldn't have taken this trade, but I'm just going to use this as an example to show you this type of entry. However, you'll see why I wouldn't take this trade here, because price is actually going sideways. So for this here, the strategy that you would want to apply would be the SR rejection, not the high-low quick scalp, because this is to be applied during moderate to heavy trending markets. Right here, price is going sideways. So it's not really trending at all right here, but it still fits the criteria for a sell. So looking over here for the sell, you want to identify bearish direction using momentum. Right here, we have a sell signal, so we're trading for a sell. Second, you want to identify a high using the high-low indicator. You have a high right here. Third, you want to identify a top wick rejection off the following candle. The wick rejection is right there, so your entry point would be right here. So this is where it becomes tricky, because as you can see, price is going sideways. The thing that you'd be worried about taking a trade here is the retracement, right? So price kind of retraces up a little bit right there, but eventually it does come back down and hit your TP, right? So it becomes somewhat of a risky entry right there. Let me see if there was any SRs. All right, so for this specific entry right here, you actually would have an SR rejection scalp. So even though this does fall under a high-low quick scalp, it's also an SR rejection scalp. So that's kind of why I was kind of thinking right now, if that was the entry. So like, for example, right here, except you would get in at proper entry. Entry would actually be the same candle, but it does align. So with this one right here, I'm just going to turn this off. There's actually 2 different strategies that apply right here. If you wanted to enter before this candle here, so if you were waiting for just this one right here, right? Like before the high-low even came up. So if you wanted to enter this before the high-low came up, there's actually an SR rejection scalp that came up right there. So this is perfect for this type of market because price is going sideways. Looking back at the SR rejection scalp, you're looking for a sell, identify top wick rejection off SR zone, wick rejection right there, confirm trading the direction of trend. Trend meter down here is red, fits the criteria. Confirm trading the direction of momentum. We have a sell signal right here. You would enter for a sell right here as soon as this candle closed, and this right here would have hit your TP. Right after this entry right here, a high-low scalp came up, and you could have entered right there as well, or basically 2 entries off the same candle there. So this is why these strategies work well all throughout the market, because a lot of these align, right? They come in bunches. Sometimes you'll have an SR rejection scalp, and then right after you have a high-low scalp. So like once you get your TP on the first one, you're going to hit your TP on the second one as well. So kind of double up on your positions if you're paying attention and actually following the market structure. Because realistically, a lot of these strategies are based off price action. The only difference is that we're using these indicators to help identify, right? Because a lot of people have a lot of guesswork when they're identifying price action. Price action is not easy to see unless you have the tools that'll help you really pinpoint. Because the thing is, if you don't have the indicators here, you're going to be looking at a million things at once, right? You're not going to really identify that and be able to catch it as it comes up. Because if you don't have anything on your chart, your chart's going to look like this, right? And if you don't have the SR zones, you wouldn't even know there's a zone right here, right? So that's why it's important that you guys have the indicators. I know a lot of people don't like using indicators, but indicators are meant to help you. If you know how to use them and you know what to use them for, then they're helpful. If you just use them for whatever reason and you don't know how to actually apply them to things, then that's why the indicators don't work well, right? That's why I create my own indicators. I don't use any of the built-in indicators or anything like that aside from the high lows here, but we already have our own high-low indicator, so it's not really necessary anymore. So question from Natasha, she's asking, so it has a double body too, would that qualify as a V1? But I can't see the trend meter. Let me check. So let me see what you're referring to right here, Natasha. The entry, yeah, actually, so you're right. So this right here would actually be a V1 continuation as well, but it wouldn't fit the criteria here because price was not moving directional, right? So in order to apply the V1 variation, and you're spot on with it, you did identify the double top. It's okay. So looking at this right here, let me just go and mark up the high lows so that you can have a better visualization. But you did spot the V1 properly. It's a V1 continuation that you saw. Not a V1 variation because you need a pending signal for that, but it does fall under continuation. All right. So as I mentioned right here, the V1 and V1 continuation applies during heavy trending markets. You can see right here that the market is not trending heavy, right? You might have not seen it earlier, but now that you've drawn up, the high lows, you can see that market is not trending. It's actually going sideways right here. So I wouldn't necessarily apply this as a V1 or V1 continuation, but you can use that as a confluence, right? So for example, here, if you're looking for a sell with an SR rejection scalp, and then you see that this aligns with the high-low quick scalp, then you might be more inclined to take that variation V1. So you're spot on with identifying this as a double top, but since the market isn't going directional, we wouldn't take this for a V1 specifically, right? Because you can kind of see here that price is going sideways. Typically, if price has been going sideways for about like 5-10 minutes, this is about 10 minutes right here, you can see that price is just going sideways. So if it's going sideways like that, then yeah, definitely want to skip it. But if price was actually moving directional like this, like price was going down, going up, going back down, then you can take a V1 variation or continuation. But it still fits criteria. I mean, sometimes you don't think about it, but you'll have like the updates while we're on live because I'm going to be constantly identifying whether market is ranging, market's going sideways, market's going up or down. And from there, you can make your decision whether you want to take the V1 or continuation from that point. But yeah, you're spot on with that, Sasha. So I think that's it for this here. I don't know if there's anything else that you guys want me to cover regarding the high-low quick scalp. If there's any other questions here, guys, feel free to put your questions in the chat. As a reminder, I'm here to help you guys out. So whatever you guys need help with, any confusion, any little things that you guys need work on, just drop your questions in the chat. So that's it for the high-low quick scalp. It's pretty simple. I mean, a lot of these strategies here are super simple. I make them as simple as possible so that you guys can't really screw them up. What matters is when you actually apply it real time, right? Because it's easy for me to show you here when you have like unlimited time to think about it. But during the live session, you guys can see that these trades come up super quickly. Like you literally have to wait and follow each candle to see where price is going and constantly analyze the market. So that's it for the high-low quick scalp. And Jonathan, you're asking about the 10-minute counter trend. We have one more cover. I'm just going to cover the variations real quick, and then from there we'll go on to the daily counter trend trade. So let's go and cover the variation V1 real quick. Just gonna see if I can find one over here. So for the V1 variation, we need a pending signal, and we typically want to trade in the direction of momentum. So let me see if I can find one over here. All right, so I don't see any over here, but I do actually there's one like right here. All right, so let me just replay to this candle right here. So first I'll show you a V1 variation, and then after that, I'll show you a continuation. So here are the requirements for the V1 variation. As I mentioned before, I can't really tell you what the overall bias is right now because we're so late into the market. Market's actually closed for the day. But I remember from this morning, if you guys remember my breakdown, the sentiment was bearish. Fundamentals were bullish. 4 hour, 1 hour, 30-minute, 15-minute, 10-minute were all bullish. So we'll assume that the overall bias is bullish because that's what it was during the live session today. This is at 9 o'clock. So we got off the live at 8. I'm pretty sure the market was still bullish at that time, right? So looking at this here, we're going to assume the overall bias is bullish. You want to confirm the high low using the high low indicator. So yeah, definitely. Natasha said she traded a little this afternoon and it was all bullish. Okay, perfect. So this fits the criteria. Gotcha. Okay. Yeah, retail sentiment was 60% short. So yeah, definitely looking for buys. So with that said, we have the requirements over here for the variation. Once you have all these requirements met, so first, confirm overall bias. We already talked about how it was bullish. Second, you want to confirm the high-low using the high-low indicator. So we have the low right here. The highs don't really matter because we're looking for buys here since the overall bias is bullish. You want to confirm the candle following the high-low is a double wick or double body rejection. You can see right here that these bodies align. So that fits the criteria. Lastly, you want to confirm a pending momentum in the direction of the trade. So for example, here, since we have a sell signal, the next signal has to be a buy signal, right? So once you have that all met, you enter a long position right here. Your TP stop loss is set to 100, 300. You have that all lined up right there. You let the trade run and let's see, go straight to full TP right there. So this is an example of a V1 variation. Let me see if I could find a continuation. All right, so right here is a continuation. I don't think I would personally take this trade right here because I can already just see that price is ranging. So as I mentioned, this strategy doesn't work well in ranging markets. Price is really just going sideways right here, but I'm just going to use this as an example. Just say, for example, the price was going directional and we had a double body right there. So let me put the requirements for the continuation. So, I mean, it's pretty much the same thing. It's just you don't need a pending momentum. So let's go hide this over here. And here's the continuation. So first you want to confirm the overall bias. Again, like we already identified this as bullish, so it was bullish. You want to confirm the high-low using the high-low indicator. We have a high here and a low here. Since we're looking for a buy, the high doesn't matter. We're looking for a low. Third requirement, you want to confirm that the following candle or high-low is a double wick or double body. We have the double body again right there. You want to confirm you're trading in the direction of momentum. So with that said, we have a bullish momentum right here, and this fits the criteria. So the difference between the variation and the continuation is that for the variation, you need one pending signal, and for the continuation, you don't need a pending signal. You're just trading in the direction where price is already going. So with that said, the requirements are met right there. You enter the trade right here for a long position, and it's pretty much the same thing, 100, 300. You let the trade run, and there you go, full TP, no drawdown. So literally blast right through your TP and another full TP right there. So super simple, not a very difficult strategy. The only difference is, for one, you need a pending momentum. For two, you need, or for the variation, you need pending momentum. For the continuation, you don't need a pending momentum at all. You're just trading the direction of bias. Let's see, Natasha said, can you send me the V1 continuation strategy after live? I don't have that one. Yeah, sure, Natasha. I'll send it to you right now. Let's see, I think I saw you post here. There you go. There you go. No problem. Yeah, main difference is just the pending momentum. So I'll look for another example here. If you guys have any questions regarding this, feel free to let me know. I can clear up whatever confusion you guys have. But, as I mentioned, the strategy is super simple. It's not that difficult at all. A lot of these strategies, it just requires a lot of practice, right? A lot of people don't want to put in the work in practice, and that's why it's difficult for people. But once you apply it enough times, you'll see here that it's actually not that bad. So I think I might be adding that requirement, like the requirement I had before with the momentum that I added to the high-low quick scalp. I might be adding that to everything because if it works that way, it should be sorry, I'm looking for them. Yeah, if it works that way, then this should be something that's used for pretty much all strategies, because you can see right here, I mean, typically, if you guys look at, and this is something I've used before, I just never really put it as a requirement. If you have a momentum signal, I'll just show you real quick. I'll just replay it back here, and I'll just show you kind of what I mean by that. So like, basically, whenever you have price past the momentum signal, odds are it's probably going to reverse on you, right? So let me go over here real quick. So we have a buy signal right here, right? And price just continues to move along. We have a sell signal right here. So whenever price passes this point, odds are price is going to keep going higher. All right, so we have a buy signal right here. Price pushes past it. It doesn't actually close, but it does push past it. You can see that price just continues to push up higher, right? So now that we have this right here, we have the second momentum right here for a buy. When price goes below here, odds are it's going to keep going in that direction. So again, same thing that I just mentioned right here. I'm looking for a sell signal. Let's see if we can find one here. Okay, so we have a sell signal right here, right? Basically, what I'm saying is, like, when price goes above here, then you probably don't want to look for any more sells, because price is probably going to reverse and continue up higher, right? Vice versa. If you had a buy signal here, you would want to take trades that come below this point. So again, right here, price pushes above, and see how price passes the momentum signal right here. When that happens right there, you probably don't want to look for any more sells, because the structure here has already been broken, and odds are this thing is going to push up and continue up higher, right? And you can see right there, that's basically what happens, right? So again, right here, price is below this point. If and when price comes below this point, you don't want to look for any more buys, right? But if price hasn't came below there, you can see right here that this is setting up for a high-low quick scalp. Price broke below. There was a high-low quick scalp that was possibly going to come up at this point. You would have just skipped it. And then this is where it resets again. So, as time progresses, I'm going to add more requirements or I'm going to switch out requirements, because I was trying to make things as simple as possible for you guys. The pending momentum one that we were trying to add to the strategy before, it's just too difficult to add on, because that pending signal comes up like almost every time. So it's going to make it almost impossible to take any trades. I think this is a better requirement that should replace that one. And we'll just see how it goes. I mean, if things change and, we want to bring it back the other requirements, we can always do that. But I think for now, we're just going to stick with this. So unless there's any more examples you guys want to see of the variation or V1 continuation, just let me know. Otherwise, we'll move on to the next strategy over here, which is the daily US 30 counter trend that Jonathan wants to see. So let me know if you guys want to see another example of the variation or V1 continuation. If not, we'll just move on to the daily entry. Or let me just find one continuation here to show Maria, because I know she asked about it earlier. So we have another one right here. Let's go back to this candle. All right, let me grab the requirements. So for the V1 continuation, there is one right here. Let me just measure the candle, make sure it's not too big. It's kind of tight, but I mean, it still fits the criteria. So again, right here, you want to confirm the overall bias. We're going to assume that it was bullish, because we already knew price was bullish, like basically all day. This was pre-market, actually. This came up around like 550. And I think it was bullish. I'm pretty sure, because when we got on the live this morning, it was pretty strong for a buy. So we're going to say that it was bullish overall bias. We're going to assume that, confirm the high low. We have another high low right here. You can see it's a double body, fits the criteria. No need for pending momentum. We're just trading in the direction of momentum. And right here would be the entry. So this one like barely makes it. I mean, I probably wouldn't have taken this trade because the candle is like right at the stop loss. But just using this as an example for, you know, a continuation, I'll just show you how it played out. And you can see how price just blasts right through it. So there's some drawdown there. It did pull back a little bit, but eventually it shot right back up and hit its TP. Gosh, yes. And as Hasha said, she took a pre-market trade and all the time frames were bullish. Retail sentiment was also 56% short. Yeah, so that fits the criteria. I think it was pretty bullish all day today. You know, if you guys remember during the live session, we were pretty much waiting for it to come back up, and eventually it did. And that's when we took our, you know, our trade from the session today, right here for that buy. So, yeah, I don't know if there's anything else here that you guys want me to cover. If there's anything else you guys want me to cover, you know, feel free to let me know. Otherwise, we will move over to the daily entry. Yeah, Jonathan said that he noticed the trade we took today was 5 minutes before news. Yeah, that's what made it kind of risky, right? Because price started to bounce around a lot pretty quickly. So yeah, it was. And that's when the volatility was moving kind of crazy and MT4 is acting kind of weird. I don't know if anyone else has been having that issue. I know a handful of people have where MT4 is just lagging. I mean, same thing happened with Jonathan today too, where he tried to enter the trade, but it didn't like enter it or it didn't exit until like a few seconds later. That typically happens when it's around news because volatility is too high. There's a lot of slippage and it's just a lot of uncertainty in the market. So I think that's it for these three strategies here. I'm going to look over the 10-minute counter trend daily for Jonathan now. So I don't think there was no entry for today for the daily. And there's actually no momentum signal that came up today, but it did push up bullish like we anticipated. If the buy signal came up, or I think what we were looking for here, Jonathan, like during the live session, there was like a pending sell signal right here, right? I know this doesn't fit the criteria, but say for example, if this one right here was a sell signal that closed, and the only reason I can see it as a sell signal was because the candle's so big, right? So if I go over here, I'm pretty much 100% sure that there's a pending signal on this. So if I move on to the next candle, or maybe not, okay, so the second one right here. So for the following one right here, this is where the pending signal actually came up. So if you watch closely, I'm going to move it by one candle and you'll see that it had a pending sell signal there. It didn't close with it, but if it did, this would have been considered a counter trend trade. So with that said right there, if that closed with the sell signal, you wouldn't have taken the sell, you would have taken the buy. The reason you take the buy is because the overall bias is bullish for today, right? You know, sentiment was super high on the sell side. Fundamentals were super high. I think they were up like 400 points almost. And then all the time frames were bullish. So instead of taking the sell there, you would have done the opposite and taken the buy here, right? So, and then obviously, you know, if you were to take that trade and you let it run, it ended up hitting full TP. This is the same one that we marked up for Seth. If you guys remember, Seth earlier mentioned that this was a V1 double body, and you can see right there that it does fit the criteria. It meets the criteria for a V1. It also meets criteria for a high-low quick scalp. I typically wouldn't apply it on here. Actually, this is the 30-minute chart. Sorry, guys. I'm gonna go to the 10 right now, but this is the one that Seth mentioned because he was looking at the 30-minute and he's applying these different strategies on the higher time frames, which always hit for him. So if you guys find something like that, you guys are more than welcome to test them out. I haven't tested it myself, so I can't really tell you if they work well or not, but from what it looks like, it does work pretty well on, you know, basically all time frames. So going back to the 10-minute over here, let me see if I could find the entry. So the daily came up right here, but this daily actually would have met criteria, right? So the difference between the daily and the counter trend daily is that you're using the overall bias. So that allows you to take the daily on every setup. So like, for example, here, this entry came up here at 8:30. This would be a normal daily entry, right? So here is the 10-minute daily. You look for entry after 6:30 a.m. Pacific, confirm overall buys, which is bullish. You confirm the first valid K2 momentum signal, and then you enter on the open of the following candle. This is the first momentum signal here that came up, which is valid at 8:30. It meets the criteria, came up before the cutoff at 9 a.m. So you would have taken this as an actual entry, Jonathan. This is the actual entry right here for the regular daily. And you can see right there that it ended up hitting. It took a while, but it did hit. Counter trend just means that you're trading in the direction of, the bias, even though it gives you an opposite entry. So let me see if I can find one over here. All right, so this is from Friday. Here's an example of a counter trend trade. Okay, so I don't know if the overall bias was bullish or bearish. I'm assuming it was bullish because it looks like price is bullish right here. But as you can see, this is the first momentum signal, right? So and the thing with this is that you can't even take the daily if the overall bias is bullish, because this wouldn't fit the criteria, right? Confirm overall bias. If the bias is bullish and you got a sell signal here, you wouldn't even take it. But if you're applying the counter trend trade, so over here, we're going to assume that it was bullish. You're looking for the first valid K2 momentum signal. There's one right here for a sell, but the overall bias is bullish. So for this right here, you wouldn't take the sell, you would actually take the buy. So as soon as this candle closes, instead of hitting sell, you hit buy, right? Because the overall bias is bullish. So this is what we consider a counter trend, because price is pushing up. It's starting to possibly reverse, but you're trading in the opposite direction. So there's a short-term downtrend right here. But since the long-term trend is bullish, you're trading counter trend. So instead of following the short-term trend, you're following the long-term trend right here, because you're expecting it to come right back up. So if you were to take this trade here, you let the trade run, goes into just some drawdown right here, like obviously goes into some drawdown, but eventually it swings right back up and blasts right to your TP. So does that make sense, Jonathan? Yeah, thanks, Natasha. Natasha said we were looking for buys on Friday. Yeah. So this does fit the criteria, and this is what would be considered a counter trend trade. You're just looking to trade in the direction of the trend. Not super difficult. It might be a little confusing at first because you're so stuck on like just trading in the direction momentum. But if you have the overall bias here, this wouldn't even fit as a criteria for the daily, because overall bias would be bullish, so you wouldn't even take the sell. But yeah, I think that's about it for right now. If you guys have any other questions, feel free to put your questions in the chat. Otherwise, I don't think we really have anything else to. Wait, Natasha said no, she doesn't get it. Okay, let me show you one more example over here, Natasha. If this is too confusing for you, Natasha, then I would just recommend you don't do it. Because if this is confusing to you, then just stick to like what you'd like to apply. Like, you already know what you like to do. Yeah, Natasha said, yeah, I'm gonna leave that one alone. Yeah, if this is too complicated, or it doesn't have to be complicated, but if it's too confusing, you got to focus on what your strengths are. So we have multiple strategies here to apply. You don't have to focus on like the ones that you don't like, right? If you don't like these dailies, and you probably wouldn't like the dailies anyways, because it's such a big move, you're going for 1,500 pips. So, if you take this daily entry here, Natasha, you're not going to be able to take your high-low quick scalps, because this is going to eat up your margin. So if you got like one trade running here for a daily, and you try to enter a high-low quick scalp, your MT4 is it's not gonna let you. It's gonna say you have too many positions open. So I would probably just leave it alone, because I could kind of get a vibe that you're like you like those quick moves, like the high-low quick scalp, SR rejection, variation V1, continuation. Those are probably your types of entries. For some people that don't like those fast-paced moves, these dailies would work well, but sometimes they don't come up. So like you could be waiting for this entry all day and it doesn't come up. You pretty much, wasted your entire day, where you could have caught a bunch of small scalps within it. So yeah, no, definitely. As Tasha said, I will focus on the high-low quick scalp and the V1 strategies. Yeah, no, definitely. And I think that's best for you, because that's what works best for me too. I only created these daily entries for, some of our members here who don't like to do the quick scalps. But from my perspective, I think the quick scalps are always going to be best, because they allow you to get in and out of trades without getting caught in manipulation, right? I'm sure a lot of you guys have taken these dailies and you're like, damn, it goes into profit and then all of a sudden it just reverses on you. You don't know what happens. Typically it happens because there's news during the during the day, right? Like for example, today, the daily came up around 8 o'clock, I believe. And that's when Yellen started speaking. So this could have easily screwed up your trade if if the market went against you because it'd be based off news. So like you could be deep in profit and then Yellen starts speaking and then it just screws up your entire trade because like, this affects the market so heavily. That's why I like taking the smaller trades, just getting in and out super quickly, and collecting my profits, calling it a day. Exactly. Yeah. Jonathan said you won't be stuck in a trade for half New York session. Yeah, exactly. You'll be in and out like within a few minutes. That's really key because a lot of market manipulation could happen at a random, right? You could be in a position and price just ends up turning against you super hard, and then it stops you out. You would have ate a loss there if you could have just pulled out a profit of taking a smaller trade. So other than that, guys, I don't really have anything else to cover. If you guys have anything else that you want me to cover, drop your questions in the chat. We've been on this mentoring session for a little over an hour now. I'm willing to stay on here for as long as you guys want, but unless there's any other questions, I think we'll probably wrap this up. We'll do this weekly, guys. So every week, I'm going to be focusing on, 3 main strategies. Main strategies applied during the live session. So I'm just going to keep drilling down on these strategies here, because this is all we apply during our live sessions, right? Like there's a ton of other strategies that you can apply, but since this is what we're actually applying during the live, this is what we're going to focus on. So this is going to be the variation V1 and V1 continuation. Applied during heavy trending markets to the SR rejection scalp applied during ranging markets plus trending markets, and 3 high-low quick scalp applied during moderate trending markets. So it's not really that difficult. I mean, these are the main strategies we'll be focusing on. Eventually I'm going to be revamping the course. All of the old strategies will still be there, but I'm going to be more focused on just these 3 because this is something that we've been applying all throughout summer. And it's something that can be applied all throughout the year. So like when the market's slow and going sideways, then we already know what to focus on, right? SR rejection scalp. When price is going heavy trending, we'll look at variations, V1 continuations. When price is moving moderate, but it's still ranging sometimes, we use the high-low quick scalp. So this is all you really need. If you can focus on these 3 strategies here and master them, which are not that difficult, it can be the game changer for you guys finding that consistency. Because I feel like a lot of people keep bouncing between strategy and strategy. They never master one strategy, and then they just don't find any consistency. If you can just master these 3, you pretty much have, the complete options to trade in any type of market. If market's going sideways, like it's going right here, you're applying the SR rejection. If price is moving direction or directional, you're applying the V1 variation continuation. So I'll just mark a couple of things up right here. So for example, so I'm just going to do this right here so that you guys can have a better idea. I know sometimes it's easier for you guys to visualize if I actually like mark stuff up like this. So I'll just turn this stuff off so you can see it a lot better. So right here, so this is a ranging market. Use SR rejection scalp strategy, right? So price is moving, it's ranging right here. Same with this right here, right? Price is ranging right here. Apply the same thing. Right, price is moving directional over here. Directional market. Use V1 continuation. Right, it's not super difficult. If you guys can can identify how the market's moving, it's easy for you to apply these strategies. If I turn on the high-low indicator and momentum, I can show you how many entries came up here, right? So we're looking down here. So we have, and I can just mark up all these entries here. There's like one right there, full TP. Another one right here, full TP. A lot of entries here that came up. V1 continuation right here. So there's 3 entries right here that would have hit full TP, applying, you know, any of these strategies here. Sideways market right here. If I turn on the SR, you can see that there were so ranging market, use SR rejection scalp. There's a couple entries right here. So let's see, wick rejection. Trying to look for that entry. I saw a couple entries here earlier that I was showing you guys for the examples, but I can't pinpoint them right now. Oh, like this one right here. There's one right there. And I'm just pretty much marking up all the entries that you could have possibly have taken, you know, during these types of conditions. So another one right there. So there's a lot of entries here. There's like 5 entries right there. Again, right here, market is moving directional for a bit, or right here, it's going sideways. You can apply SR rejection. So it's not too difficult. If you can identify market structure here, you can take a bunch of entries using just these 3 strategies, or 4 strategies, I guess. Yeah, I mean, it's not really that difficult at all. It's pretty straightforward as long as you can identify this stuff. And identifying this stuff isn't that difficult, right? If you guys have trouble identifying market structure, because I can see here that, you know, some people may have trouble looking for this. If your problem is identifying market structure, just turn on the high-low indicator. And all you got to do is draw the high lows, right? And if this is your issue, you just draw your high lows like that. And once you have these all drawn up, I mean, really all you got to do is zoom out. If you could zoom out. So you got that right there. You zoom out, you can see right here that price is like literally just going sideways, right? So it's not too difficult. If you guys can draw a market structure or just draw the high lows, this will show you exactly where price is going. It's going sideways. Let's see, Natasha said, can you also send me the updated high-low quick scalp requirement? Yeah, sure. You know, I'll post this up in the group as well. Look at that. Yeah, so I'll post this up in the group so that you guys can see. Added 1. Covered on today's entering session. All right. So I'll put that down right there, and I'll also send it to you, Natasha. There you go. So yeah, I think that's about it, guys. Unless you guys have any other questions, you know, I try to think about like whatever questions you guys would have, but I just can't really pinpoint it because these strategies are so simple. You know, the real knowledge comes from like actual trial and error, right? You have to try this out yourself. Because I can tell you exactly what requirements you need. I can show you different examples, but it really comes down to you applying the strategies real time, right? Because the thing is, I can show you exactly what to look for, but when the trade actually comes up real time, you know, you got to make the decision to hit buy or sell. You can't just like wait for me to tell you, hey, take this trade, hit buy or sell right now, right? Because it happens too quickly, especially for these high-low scalps. You know, as soon as you see the wick, you got to hit the sell button, or as soon as you see the wick on the bottom side, you got to hit the buy button. You know, I can't really hold your hand through that specific strategy because it just happens too quickly. I got to tell you guys to anticipate it, but you guys have to actually look for that wick to take the entry there. So All right, guys, I think that's about it. We've been on the session for a little over an hour. If you guys have any other questions, feel free to put your questions in the chat. Otherwise, you guys are always welcome to email me. You guys can email me at sean@kodikaitrades.com. Otherwise, I'm available on Telegram too. If you guys are new here and you guys want access to the indicators, or if you guys don't have access to the indicators yet, just go on the website, kodikaitrades.com, and then you can get your access here. This is where you'll get all the indicators to be able to identify these strategies and apply them efficiently. Because you guys can do this by hand as well, but it's not going to be that easy, especially with using these high lows, because these high lows are very tricky. It's really tricky to identify what's an actual valid high low, because when you get into a ranging market, like all of these look like lows, right? So this looks like a low. This looks like it could be a low. This looks like it could be a low. You turn on the high low indicator, you can see that there's actually no low here, right? You can be easily tricked when the low is actually down here. So, and you got to be super quick. Like doing this by hand is too difficult. That's the whole reason I created indicators for myself, because if you're scalping like this, you got to know where price is going right then and there. You can't be thinking about it too much, because especially on the 1 minute, you have 60 seconds per candle to really make that determination, right? So, all right, guys, I think that's it for now. If you guys have any questions, feel free to reach out. Otherwise, we'll be back here tomorrow morning for the regularly scheduled live session, where we take on Tuesday for this trading week. Let me check the news to see if there's anything for us to look out for. So tomorrow we have some news at 6 o'clock, HPI, S&P, CS Composite, CD Consumer Confidence, Richmond Manufacturing Index, Fed Member Waller speaking tomorrow as well. So we got some news, high impact news at 7, light impact news pre-market. And we'll see how that goes. But I mean, other than that, I think hopefully this will be beneficial for us. The news will cause price to actually move a little more than what we're used to. So other than that, guys, I think that's about it. Unless you guys have any questions, feel free to reach out. Otherwise, we'll be back here tomorrow for the next live session. So, all right, guys, I'm gonna wrap it up. If you guys have any questions, feel free to email me. Otherwise, I will see you guys here tomorrow, same place, same time, as we